following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you guys had a great weekend. And looks like oil's bouncing around this morning. Gold's selling off a little bit. We're going to look at the inflection points when it comes to those two commodities. Look at the notes, look at the S&Ps, kind of give some guiding comments here, hopefully, for the week and where we may be headed. We're going to look at a couple individual stocks, Tesla mainly. We're going to read a lot of articles about Musk this weekend. Guy looks tired. He looks tired. Looks a little confused. Don't know how that plays into the stock, but just wanted to make that comment. Let's take a look at the S&Ps. We had a little bit of an issue with the scanner on Friday, and I apologize for that. I had a couple emails about some things, just in particular, not updating exactly right. So we've got everything fixed. Alert system that we've talked about being in the scanner, we're working on feverishly right now, which I think you'll like. But let's take a look at the dollar really quick. I've got the S&Ps up. If you'll notice, 2059, 2060, we've retraced back up into that big inflection point. Pretty decent reversal on Friday. We're going to talk about what happened there. But let's go right into the dollar. And let's hit the June contract. And let's see where we're at. Remember that DMZ we talked about? That kind of wait until we get back up into this 93.81 into 94.12.13 area. Well, there's the weekly. We're here now. And what do you do? So I think you've got, kind of a close below, go back and fully retrace back into former support, now resistance. I'm looking at the dollar from the short side, trying to play the odds here. Even though we're above on the dailies, remember that collection area. There's a lot of resistance in this area. We talked about 93.81. We talked about 93.91 and this 94.12. So we have kind of edged back up in there into that area. And at the same time, we're looking at the notes here, kind of coming off only support area we can play. Here's a daily, a little bit of a reversal Friday. No new profiles attempting to appear on the daily, but the only thing we can play defense against right now, 130.15, 130.16 on the 10-year. That's the case. We're kind of bouncing off of there. Remember, that's where you can play defense. And as we look at this, we're gonna cover a couple more bases here before we get going. We're going to hit gold really quick, and we're going to look at oil. We're going to look at the XLU too. Gold, nothing real scary going on here. Good dollar rallying a little bit. Gold kind of repricing itself a little bit. But remember, this profile appearing below is pretty bullish. And now, guess what? You're sitting at support on gold, 1274. I think Tom talked about this number too. So that makes me feel good. 1274. Play defense. Boom. Got a high probability setup here. I think you could look at about a 10-point or maybe more move up. Long-term trends still in force. We're looking at the scanner here. Going to the futures section. And I'm going to be in San Diego late tonight. I delayed the whole trip, Vegas, San Diego, till today. So might not do the show tomorrow, but we're going to see. It would be a stay-up 24-hour type deal. So let's look at gold. There's what I'm talking about here. Weekly, daily, above profiles, above balanced areas. You're sitting here at the 240. Let's just show you where this is at. There's the 240 sitting right there. Not showing bottom because we've kind of already bounced a little bit too hard off of that. I mean, not much, a point or two. But that eclipses that bottom indication. So here's gold, taking a look at it. Yeah, John from Philadelphia pointed something out important that I overlook. I switch around really quick on the charts, and I apologize for that. Please tell me to slow down at times. It's good for everybody if you make those comments, more than likely. So flashing the charts back and forth, keeping them statically up there is probably a better thing. So I'll try to keep that in mind, and thanks for reminding me. And we got to have John from Philadelphia on pretty soon again to give us a grain update. That was incredible last time on beans. So the gold structure, the sell structure, there it is. Here's the S&Ps. We're going to kind of follow up with that a little bit. Let's take a look at gold or crude while we are on here. There's WTI crude June contract. Here's the level of the market right now. Come off a little bit this morning, kind of in the middle of a couple of profiles. As we go back to the crude chart, I'm stuttering this morning. This is only the second cup of coffee. So number 3, the cobwebs start clearing. So looking forward to that. Crude oil. All right, so here's the June contract. This is the long-term story. I mean, all the stuff going on in Canada, evacuating 80,000 people, not a small situation. Here's the good news. Sometimes you get caught up in the immediates, and when you step back and you look at what's really happened with crude oil, I always kind of extend the chart out and say, okay, where are we at? What's the long-term situation here? What side of the market do I block off? And as I look at crude oil in this 42.06, which is held very well, and really the first break on the upside of a balanced area, and God knows when was this? Well, actually, the last break on the upside was May 2014, to put it in perspective, 2 years ago. But then we had the complete cave-in about July 2014. So big event has already happened. Here's the daily. We've used a little bit higher number as support on this, and this is all in the scanner. I'm going to go into, am I doing it again? Daggone it. I'm sorry. I got to stay on the chart here longer than 2 seconds. There's those numbers. There's that 42.93. There's the 42.06. We talked about that being the DMZ of a collection area. We didn't quite get down into that area, which was awful. And as we go back to crude oil on the daily, you'll notice that we're right in the middle of a balanced area here. So we're going to talk about this a little bit more when we come back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Want to hit coffee really quick. I hope we're good. I'm having to reformat this machine, guys, so hopefully we'll be a little quicker. I know my video is freezing up every once in a while. Looking at coffee futures, this is the July contract. You remember the other week we were talking about, this divergence going on, navigator higher lows, lower lows, and price action, a chance to play defense around 117.63. Here's the daily. Got some kind of decent news here. We've eclipsed the daily profile. You got a little bit higher place to play defense here, 123.88. There was a gentleman that called in about coffee futures. I can't remember who it was, but again, long term, you got a really good chance to play defense here. 117.63. You've got a decent upside here, 133.63 on coffee futures. But again, this kind of long-term divergence in place here is a nice little situation. We saw that in the Australian dollar before it popped, from 69, even lower actually, up into 75, 77. Yes, I'm going to finish crude oil. Apologize for that. So crude, I had a request about coffee and I have ADD, so the dose is not correct yet. So here we go. Crude oil, again, breakouts have to be bought, especially closes above 46.35. This is our daily. We're right in the middle of a balanced area. And as you can see, after that breakout on the weekly, we've kind of been using the dailies to regulate the trade up. So you've got, you can play some defense on the long-term trade below 42.93. All bets are off below 42. Here's the 240s. You've got 44.26, the 240 support there. I just don't. We're right in an area right now where there's not a lot of leverage. I think you just got to either wait for the market to come to you on the short term or the intermediate, that 42.93, or short term 42.46 to be buying, catching a bid on crude oil here. So a little no man's land action here, but I don't think the long term trend is in danger whatsoever on crude, if that makes sense. All right, we hit gold a little earlier. I know it's pulling back decently right now. 1274 still going to be playing defense. We're down at 1273 right now. 1273 and some change, as you can see that. So again, you got to be willing to say uncle at some point on letting the 240s regulate this. But again, you've got a place to play defense here, and all trades aren't going to work out. Trust me on that one. Let's see what the dollar's doing since we talked. It's backing off a little bit. I mean, this 94.12, 94.13, a really big number for this particular product. Again, playing defense above there, you've got a really decent risk reward scenario on this one to possibly revisit the entire fair auction down south at 92.52. We're going to go back into the scanner really quick, and we're going to just gaze at the 30-year. Here's the 30-year. And again, let me look at the cell structure here. This is where we're out in the 30-year. You got support 164.73. That's about 24, 30 seconds. Is that what that is? Yeah. Let's take a look at that. So here's the 30-year. Here's the big number we just talked about, 164.23, 30 seconds, 24, 30 seconds, right down there. That's support on the 240s regulating the trade up. The dailies still look great. Let's get back to gold one more time here. Now, again, I want you to kind of focus on this area right here. This is a big area, 1274, 1274.20. All right, let's take a look at Tesla. All right, so let's see, pre-market, we're trading 217. All right, so here's the weekly. Here's the breakdown, 233.37 on the long term. And you also eclipsed the daily. You closed below and went back and retested. So as the long term had broken down and you had the daily close below on the unfair lows on the daily 229, you had the retest. So again, you know what I do for stocks that I'm watching, I put them in a custom list in the portfolio section. So if I go into, here's John Test or whatever portfolio that I set up, it's just a test portfolio. I'll keep Tesla in here. So if I want to kind of go back to look at some of the things I want to monitor, and this is why we're putting alerts in, by the way. So when you have your custom list, it'll tell you what's going on. Sorry for moving the mouse that quickly. I can go in here and add something to we're also putting a drag and drop feature in here on the HTML5 version we're building right now. So if I want to go in here and add Tesla, right there. Wrong list. I added it to test 55. Test, where's it at? There it is. So there's Tesla now. And there's the cell structure. All right. So what do you do with this now? So it's already broken down below, went back and retested the regulator of the trade. Here's the 240s, a really wide profile. Breakdowns have to be sold again below 211.64 on Tesla. And you got to kind of longer term stops have to be above this 230 area. We're going to take a look at Apple really quick. Okay, so, man, here we go. So that, we know about the breakdown below 199.80. Here's the daily. We talked about selling breakdowns again below 93.81 and being able to use that as resistance. This morning, And again, I apologize if I move the charts really quick. I try to get to everything as fast as I can. 93.02 is where we're trading pre-market. That 93.81 is going to be big resistance on this. That being said, let's take a look at the NASDAQ. Let's also reference the scanner. Let's go back into the indices profile heat grid. And again, we had a couple of little data issues on Friday. Apologize for that. Here's the daily indices profile heat grid. Not a lot of indices turning, and we'll talk about that a little bit more when we come back. This was a sea of red last week. We'll be right back, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year US dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. And we finished up, we were going to start getting into the NASDAQ here. I'm showing the sell structure for the intermediate on the global exchanges here. And the NASDAQ, let's see here. Still relatively breadth negative here. Weekly's about the same as last week. S&P's, we got right up into that unfair low here. We're going to talk about that around 2060, 2059. There's a 2059 and a half, so to speak. and the breath's still a little mixed up. So let's hit the NASDAQ. And NASDAQ 100, you can find some decent little picks here. Let's go into the chart really quick. So here's the daily. We had the new profile attempt to appear. Here's the unfair high now, 43.56. That was Friday's information. And let me see if we can get the scanner to stop downloading information here. And I'm purposely trying to slow down here. So 43.37, we've reached a high today or this morning, 43.47. So we've gotten very, very close to these unfair highs around 43.56 on the daily, and that's 43.53 on the 240. So you got big resistance there. You got the breadth negative on both. So, I mean, by default, you have to be selling that neighborhood. All right. So looking at this, there's that 43.56. There's the 43.53 as I mouse over these. So we're within the balanced area on both of them. You know that. You know we've broken down on the long term on the weekly, and you've got breadth in your favor. All right. So, and I'll say that's, you know, pretty big middle ground on the weekly, and I'll show you what that means. 57 of the stocks in the NASDAQ are still in the middle ground. You crossed over to negative territory week of the 29th. And I think you just got to be selling resistance still here on this one. Let's go back into the indices profile heat grid. And look at the S&Ps. We're going to drill down into this. You're going to notice a little bit of a mixed bag here. So what's the easier trade? Probably it's selling the NASDAQ. As you know, here's the daily. We got right up into that 2059 area, backed off a little bit this morning. Here's a chart off the scanner, reached a high. Let me just go to E-signal really quick. I'm slowing down. Let me access the S&Ps. So we reached a high this morning of 2059.75. That's 2059.65. Here's the E-signal chart. That's what that looks like. So, you know, again, what's the easier trade? Probably the easier trade is selling the NASDAQ while also keeping in mind that our notes look relatively supportive here, as we talked about before. Something disturbing, that little reversal we had Friday, was the XLU selling off like it did. Found support here, though. This is our 240s, around 48.62. We're going to be printing this morning. Looks like 48.85. So not a lot of danger here on the daily. This is the XLU. Disturbing move down. Long-term trade still on, I think, to reach those weekly unfair highs. And those weekly unfair highs are around 50 on the XLU. So again, you got a chance to play some defense here. Notes look really good. Thirst for yield situation. Market might come off. Notes might be supportive here. Crude is, again, going back to crude oil. Obviously, a lot of fundamental things going on. Crude, you know, I don't see any big rallies in crude right now. I think we're just going to kind of rattle around. We've had a lot of news, the Libya stuff, the Canadian fires, all those problems. Crude oil's just not really reacting very violently on the north side. So again, support is 42.26. Let the market come to you. This may pull down some big players. ExxonMobil, let's take a look at it. This morning, it looks like we're printing 88.70 right now. $88.70. Okay. Here's the weekly. You know, this was one of those stocks. It led. I'm not going to say it led crude oil down, but it was the it was one of the indicators, one of the things we were looking at along with the XLE when crude, and this is our weekly on ExxonMobil, as crude was just cratering. This thing was kind of beating it on the downside. And then when crude made some lower lows, ExxonMobil made some higher lows back in middle of January. And, we talked about targets, playing defense below 73, I believe, and then some targets up top, 84, big move. And then it's, again, kind of showed itself early here on the long term, and now we're, looking quite well on ExxonMobil. But what do you do with it now? So here's the daily. Again, you're always trying to buy stronger oil stocks. It takes a lot to move this stock, but, this is 87, 84, the defense area on this particular stock. Now, if crude comes back and ExxonMobil sits there, you're looking at something that might be a decent little play. But going into the XLE, and we're going to hit the XLE energy sector here. Some of these stocks may be resting right now just because crude oil might spin around right now, but you've got a couple of little situations here. Let's see where NFX, that's the situation there. I love how this thing kind of last week came down and hit that major support 33.88. Could be kind of launching paddish right now, sitting on the daily, unfair highs. We've got a couple other ones we've been looking at. Let's just take a look at SE. Wow. This one could get a little pop. SE, you got kind of similar inflection points, 31.21. 31.21 weekly and daily unfair highs, closed above that last week. What are we doing this morning? Any prints this morning? Printing a little bit higher, actually. Halliburton. The reason I'm looking at Halliburton, I'm going to show you on the E-signal here. We're going to be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, so we were looking at Halliburton here. The reason I'm looking at it is because a little interesting setup here. That peel back right there means that this morning we're going to have a new profile on Halliburton. Kind of be on the lookout for that in the long term. We're sitting at the bottom of a profile in the daily, that general area, noise factor included. So let's look at Halliburton on the E-signal chart. So this is what I'm speaking of. We kind of had that pullback after we had broken out and retested 36.74. And again, this is wrapped up in some news. But as we look at this, here's the daily. So, you want to wait and see where those inflection points line up on the weekly. See if we can kind of get more of a supportive situation on Halliburton. Again, I think the crude oil trade is not completely over on the long side. But again, I mean, crude oil could come down just a little bit here to find some more support, and we'll have to wait and see where the inflection points are on the weekly. We hope that the inflection points on the weekly would kind of be in this general area, and then you could play defense, get a decent risk reward on the Halliburton. Looks like Halliburton's trading this morning 39.64. I've been watching David White too long. I love it when he does that. So that's the situation on Halliburton. We're going to take a look at a couple other oil stocks. A couple of the ones we've been kind of we picked out a while back. They don't have to always last. Like, hey, these are always going to be the strong stocks, and they're always the go-to situations. Things can change, and the scanner kind of lets you know when those conditions are changing. Let's see. I'm just looking at the cell structure here. Let's look at KMI. This is I think you got better longs, even though it's trading within the weekly here. Let me see. Let's look at it on an E-signal. KMI. Kinder Morgan. KMI. Here we go. Yeah. Looks like it's printing this morning already, 16.95. So here's the weekly. I mean, I know, you're looking at this like, wow, it's pulled all the way back to the unfair lows. It looks like it might want to do a flush here. So of all the oil stocks we're looking at, this one, not the best long out there, guys. And if oil pulls back a little bit more, this thing could do a little bit of a flush here. It's a $17 stock. There's not going to be a tremendous upside on that trade, but I put a gun to my head. I'd rather be short that than long it. I think you got better longs in the scanner than that. Let's go back and look at the treasuries again, just really quick, the 10-year. I like how this is looking, and we're going to go back and look at the S&Ps in just a second. We're coming up on the end of the show in just a little bit here. 130, 15, 16, bounced up. And we're going to look at the S&Ps. Coming off those daily unfair lows around 2060, 2059, 2060. Breath looks still a little mixed up here. I think you've got some intermediate short possibilities on that. Let's go into the NASDAQ again. Would love to see this edge a little bit higher. 43.53, 43.56 will be the kind of whack-a-mole again. Let's take a look at Netflix, see what's going on with the FANG group. All right, so looks like pre-market we're trading around 91.22, so a little bit higher. This is Netflix. You got a good chance to play defense here below 89, but again, I'm not a huge fan of being long the NASDAQ right now. Let's take a look at Amazon. Okay, so as we talked about this last week, we talked about, okay, and this is last week's bar. We talked about the close above the earnings without question, and looking at 651 as the, kind of, let's don't buy the high print here. Let's wait for the market to come back. Sometimes it doesn't come back, by the way. But we reached a low last week of 656, got very close to 652, 61.95, that general neighborhood, and kind of ramped up again. And here's the daily, trading 675 pre-market. So here's those daily unfair highs. In my opinion, you don't want to be shorting this thing. If you're trying to find some things in the NASDAQ to short, this is not one of them. You've got big support around 651, 652, 651. These are daily unfair lows, weekly unfair highs. And again, I think you got better shorts out there. Let's take a look at Facebook. All right, so again, positive situation, never even got back, never looked back, 113, 114 and a half. That was where big time support is. This is our weekly on Facebook. Here's the daily, close strong again. Man, it did it for me when these guys had over 1 billion unique visitors in one day. There's like, what is there, over 7 billion people on the planet now? This is incredible. Insane. Yeah, this is not a stock to short. Wow. Earth-shattering news. But seriously, folks, this stock doesn't have to be too high. So, pay attention to those numbers we talked about. You got big support, 113 and a half, 114, that general area. That's where your long-term investor kind of uncle point might be below there. I think this is one you just got to let it breathe. It's got a mind of its own. Let's look at a couple other ETFs here. XLF, I've been kind of, it's not something I'm a huge fan of. I think the 10-year is probably going to move even higher. Thirst for yield may bring this thing down, and also, the broad market in general may come off a little bit here even more. So the XLF, you've got a retracement possibility back into 2237. I'm just not a big fan of being long or short this thing. I don't know why I keep even throwing it out there to you guys. Let's take a look at the healthcare section. We hadn't talked about this in a while, and we want to look at this because last week, pre-market looks like I don't know if this is a real print or not, 69.53. So again, we've come down into those weekly unfair highs. I kind of like this setup a little bit. We're going to talk about this a little bit more when we come back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. Healthcare, XLV on that support we talked about on the weekly, but again, I'm not a big fan of backing the truck up on that one. I think the markets could come off a little bit more here. The Australian dollar, this one kind of broke my heart, getting below 74.81. That was kind of Custer's last stance there on the kind of let the market come to you after we got some indications up top. Here was kind of the breakdown, 75, 77, 78, at the same time that weekly was rolling over and turning until, showing that yellow peel back. Now you've got to just sit tight, wait on this one. Again, the long term on the Aussie dollar, the tone has changed here. Sad. That's okay, though. Let's take a look at the Japanese yen. This is one, I love how this thing is acting now. We've talked about getting back into that 105, 106. We reached 105.5 for the long term. Kind of put the line in the sand, play defense below there. Give it a little room. You got a big risk reward we talked about on this one. 110.40 I see is extremely possible on this trade. And now we're starting to gravitate above the unfair highs 108, 08, 09. Now, trades like this, when you get into these unfair highs on the daily and you've caught that bounce off the 105.5 we talked about, this is where you got to start lightening up a little bit. A daily close above this profile is going to allow you to use this as support to play around with doing some trading in that area. So that's the situation on the yen. We're up almost 300 pips since we talked about that number down below. Going into a couple other currencies here. The good old Canadian dollar. All right, so new profile this week. And I don't see this as a short right now. I think crude could kind of relax a little bit more. And Canadian dollar, obviously, with all the problems up there, I think it could get devalued again a little, which would mean this chart moves a little bit higher. So this is kind of a sit tight situation. Here's the daily, again, kind of breaking stride on the down move here for the first time in a while. If you look at this happened a couple of days ago. That's the situation there. Euro. All right, reversal, weekly close back below 114.65. That's going to be resistance now. But you got to pay attention to the dollar. If the dollar comes off of these 94.12 areas, we could, kind of inversely rally back up into 114.65. I think the easier trade here is to, this has been nerve-wracking to me. The easier trade here is to go back and look at the dollar. Let's go back to that. And we've come off 94.12 this morning, a little bit, not much. I think you got to just kind of wait and see what this thing does. Remember, I think the euro's 30-some% of the dollar index right now. All right, just to wrap things up, guys. Here's the S&Ps coming off 2060. Stay tuned for Larry, guys. I'll be back Wednesday, maybe tomorrow. Not sure. I'll be in San Diego tonight. Have a good day.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.